Good afternoon, all. We're going to kick off now. We've got a number of attendees now onto this afternoon's webinar. Welcome to our webinar for preparing your business for Brexit. I hope you all had a relaxing Christmas and a New Year break. Very different for all, but I'm sure a relaxing one nevertheless. So today we're going to be talking a lot about Brexit and the recent Brexit trade agreement that's been agreed between the UK and the EU just prior to Christmas. One of the key things to understand, and I suppose one of the key takeaways from today, is it's very much quite a lot of new guidance, and a lot of the guidance that we've seen recently in the last couple of weeks is quite new for us as well. And so we've been digesting that at the same time as a lot of our clients and businesses have alike. In terms of a little bit of housekeeping on our side, if you've got any questions for today's webinar, if you just click on the Q&A button at the bottom of your screen, and if you write your question on there, what we'll do is we'll go through all of the questions, and we won't be specifically having a Q&A session this afternoon in the webinar. The reason for that will be because we've got quite a lot of content to cover and quite a lot of detailed content to go through. And so what we'll do is we'll get your questions that you put into the Q&A box, and we'll go through the questions once the webinar has finished. And I'll be sending around to all the participants here today a document which will have all the questions and answers that have been raised today. And one of the key things I would like to see as well is if you have got some questions and it has been asked by a participant already, if you could please use the thumbs up icon, because then we can start to see some of the key themes and key questions that a lot of you will have going forward with regards to the Brexit trade agreement and how things will be working. So it'll be quite interesting to see the key themes from there. In terms of Raffingers, hopefully by now, if you're logged on today, you know a bit about us and who we are. We've got our core values here on the screen here. And in addition to sort of trying to make sure we're providing the best service for our clients and making sure we're getting things done, you can see that we're very passionate about what we do and providing that best service. And in terms of the services we do provide, in addition to the usual sort of routine compliance services such as accounts, tax, VAT, and payroll, we've got some of the additional core services that we provide. If you're already a client of Raffingers, you're probably aware of this because it's something that we're really pushing ourselves to make sure we're providing the best service for our clients. So as you can see, we'd like to think big, we like to think different, and we like to provide the best service we can to our clients. A little bit about myself. I'm one of the partners here at Raffingers, and as it says on the screen, I specialize in strategic business planning and cash flow management and profit improvement for our clients. So effectively what that means is I love working with my clients. I love to understand their businesses. I love to understand what makes them tick and make sure we provide them with a bespoke service to aid them in their business and personal goals. So today, what we'll be discussing in terms of the Brexit trade agreement, there's a lot to go through. I've spent the last week and a half trying to decipher and understand as much as I can with regards to what's happened and what's been agreed and what impact it is going to have on UK businesses and consumers alike. And it's quite complicated, to say the least. It was quite difficult for us in the situation where, for a lot of businesses and a lot of accountants, that the agreement was left quite late, and a lot of the draft legislation that was in place hasn't changed, but it needs to be ratified. And so it's left us in a bit of a position of playing catch up. But again, we've done our best to go through the trade agreement, understand what the key changes are, and take you through those today. So what I'll be doing firstly is providing an overview of the Brexit trade agreement to begin with. What are the key changes that you need to look out for? Then I'll focus on customs declarations, which are very, very important from my point of view for businesses importing and exporting. We'll then go on to exporting goods, where you have business-to-business exports, importing goods, where you've got business-to-business imports, and specifically flowing on from there, looking at this new concept of postponed VAT accounting, which is an interesting concept for a lot of businesses, which I think will be quite beneficial going forward. We'll then look at business-to-consumer exports. So these are the old distance selling thresholds. So where you would have UK businesses selling to individual EU customers. And then finally, a couple of things to finish off on, which aren't very detailed or considered, but something that we've had a lot of questions from our clients on at the moment is, firstly, where are your service business? So we've got clients saying to us, look, we don't import or export goods. We have nothing crossing borders in terms of goods, but we provide or sell services or buy services from the EU. So we'll look at some of those VAT considerations from that perspective. And then finally, just to finish off, some other VAT scheme considerations. If you're under the margin scheme, the MOS scheme, this sort of thing, what do you need to think about? So firstly, the overview of the Brexit trade agreement. So effectively, if you've been living under a rock for the last sort of 2 or 3 years, you would have missed that there was the end of the Brexit transition period on the 31st of December. So effectively, what we needed to do, the EU and the UK had to strike a deal before that date. And luckily enough, at the last minute, they did strike a deal, and it's been ratified by the UK Parliament. So from the 1st of January, luckily enough, we're trading with the EU quota and tariff free, which I think was the most important thing. A lot of the key details in the agreement had already been provisionally put out there, and it was just making sure we can get these quotas and tariffs sorted, and we can trade freely with the EU. So some of the key things to consider really from your point of view as a business owner is going to be firstly around the travel. UK nationals will not need a visa if you're just going on holiday for a short period of time to the EU, but you will need a visa for any stay that's going to be longer than 90 days in any 180-day period. And there'll be new procedures for UK travellers at EU borders. So no longer going into the EU passport lines. There's going to be new procedures for us as UK passport holders. And at the same time, if you've got a European health insurance card, you can use that until basically expires. So it will be valid until then. And the final point really from a travel point of view to consider is that the mobile roaming charges may change. So if you're using your phone whilst you're abroad in Europe, just make sure you check with your provider first, because there's going to be some changes coming in from there. Now, in terms of the trade side of things, like I said, there's going to be no tariff charges on goods or quota limits on the amount that can be traded from the 1st of January, which is a positive. However, there are going to be additional customs checks at borders. So there's going to be custom declarations to be had, and effectively this is going to impact a lot of exporters from the UK and the EU to make sure those checks are done properly. And so that's what's causing a lot of the delays that they're talking about at the ports like Dover, where people don't necessarily have the right documentation in place to ensure that they've done all their declarations properly. In terms of services, so one of the key areas of services to understand is that the UK economy is heavily dependent on the financial services industry, and that's the backbone of our economy. And unfortunately, UK financial businesses will lose their access to EU customers. However, many of the large financial institutions, your banks, your insurance companies, and that sort of thing, have already established their subsidiaries in the EU countries. So effectively, they're going to continue to access their EU customers. So what's interesting, whilst the UK has granted EU businesses temporary permission to continue to service UK customers, there is no reciprocal EU agreement for UK businesses yet. So if you're a UK business accessing those EU customers, if you don't have a EU subsidiary or an EU office set up, there's no reciprocal agreement for you to do that. So it's quite a disadvantageous position for UK businesses to be in at the moment. So we expect there's going to be some sort of regulatory discussions about the equivalence for this in 2021. And hopefully for UK businesses, there is that equivalence that does come out in 2021. So it'll give those UK businesses access to their EU customers. So this is really the sort of overview of the Brexit trade agreement if you're looking at a travel, trade and services point of view. In terms of moving on and going into sort of the first key area of our webinar today is really around the customs declarations. Now, if you're a UK importer or exporter, you'll probably be aware of all the changes that have happened from the 1st of January with regards to customs declarations. However, for the benefit of some of the attendees today, what I'm going to do is I'm just going to go through the basics, what's happened and what you need to get ready. But before I do go through that, one of the key takeaways for you today is that we have a Brexit hub on the Raffingers website, and all the content that I'm going to be covering today in our webinar, and a lot of the links with regards to forms to be filled, certificates, EU websites, UK government websites, that sort of thing in terms of the guidance, that is all on our UK Brexit hub on the Raffingers website. So once the webinar is done today, please do take a look at that, because it's got all the guidance on there that you can actively just access anytime and just use it to help you on your way. So effectively, customs declarations. From the 1st of January, all businesses that are importing or exporting goods will need to be making customs declarations at the border. So effectively, it's very, very similar to the rules that would have applied when you're exporting goods to the rest of the world. So prior to Brexit, when you were exporting goods to outside the EU, including Switzerland, Norway, Iceland, Liechtenstein, you would have had to make customs declarations. So same sort of thing, that applies. So effectively, what the trade agreement has done from that point of view, it's made this scheme of UK and rest of the world, and the EU then sits in the rest of the world. So effectively, you're going to have to be doing these customs declarations for anywhere that you export out of the UK. Now, what's quite interesting is I've spoken to a few clients about this, and you can do the customs declarations yourself if you wish, but it is quite complicated and you'll need some sort of compatible software to do it. So what we've seen recently is a lot of our clients who are having to export and having to do these customs declarations are actually using specialist companies. So you could use a courier, a freight forwarder, or a customs agent to do the customs declarations for you. Or if you're feeling brave and you feel like you've got the ability to do so and you want to save a bit of money, you could probably try and do it yourself. But genuinely, I wouldn't recommend it. I would honestly say if you are doing a lot of exporting or importing, you're probably best to engage with a courier, freight forwarder, or customs agent to do all these declarations for yourself. So in terms of what they do and how they work, what I want to do is just briefly speak about each of those. And like I've said, on our Brexit hub on the Raffingers website, we are going to have links with regards to each of these type of, I suppose, agents, if you want to call it that, that can help with these customs declarations. So we have got quite a lot of links on the website that can help you get in touch with different types of agents to help you with these customs declarations. So firstly, a freight forwarder. A freight forwarder will move goods around the world for you. So basically, they export and import all the goods for yourselves. Now, what's quite good with a freight forwarder is that they will arrange all your clearance in terms of the goods through customs. They have software that can communicate with HMRC, which allows them to do so. So they do all your form filling and all the work for you to make sure your goods get into your hands if you're importing. Now, effectively, what you can do is you can find out how to use a freight forwarder on the British International Freight Association website or the Institute of Export website. Like I said, we've got links to these two websites on our Brexit hub. So if you do want to use a freight forwarder, do take a look at those websites and engage with a freight forwarder that meets your requirements. Secondly, you could use a customs agent or broker. And again, very similar to freight forwarders, what customs agents and brokers do, act as the middleman and help you clear your goods through customs and borders. Very, very similar to freight forwarders. But what you need to consider is you can hire a customs agent or broker to act for you directly or indirectly. So again, it depends in terms of what type of representation you're going to be requiring and what type of services you're going to be requiring. Now, on our Brexit hub on the website, we've got links for the Small Business Forum and also the UK Imports Forum. Have a look at those if you want to use a customs agent or broker and try and understand in terms of whether it's the right fit for you with the different type of companies on these websites and how it would work for you as a business and the charges that come with that. The third, and I suppose if you want to call it the most common option that businesses tend to take, is they tend to use fast parcel operators. So fast parcel operators transport documents, parcels, and freight across the world in a specific time frame. The way to think of this is the likes of DHL effectively, and they deal with all the customs requirements for you as part of your delivery. Now, a lot of UK businesses use fast parcel operators because it's quick, it's easy, they do all the work, but it can be potentially quite expensive. And the costs that you have with the likes of DHL for a lot of smaller consignments can be quite expensive if you're getting them to do everything for you. So it's worth looking at again. And again, what you need to do is make sure and understand that these guys can't act for you on your behalf without the written instruction from you. So that's when you engage with a DHL or a fast parcel operator and you direct them to do everything for yourself. Now, effectively, what you need to look at is once you've got them acting for you, the instruction will have to show whether they're acting for you directly or indirectly. And HMRC will only ask for the evidence of authorization if they need it. So it's not something that they will ask for on every import or export. It's something they can potentially ask for. And again, we've got the links to the government website on the actual fast parcel operators, who they are, how they work on our Brexit hub. So please do take a look at that if that's something you're interested in. And so the final point to consider for customs declarations is actually making the direct declaration yourself. So, like I mentioned at the top of customs declarations when we kicked off with this, is it's a brave thing to do, honestly, because there's a lot of work that I've seen involved. You must have an EORI number, and all businesses importing and exporting need to have this number anyway. And what you need to understand is that it's quite an onerous process. So the declarations are submitted through a chief system, and effectively, if you're going to do this yourself, you need to apply for access to chief, and then you need to buy this third-party software that can help you submit these declarations through chief as well. So there's a two-step process, if you want to call it that. And then also you're going to need this chief badge role. So effectively, there's a couple of things that you need to do to jump through the hoops to make sure that you can actually kick off and start doing the declarations yourself. So it's really important to understand that if you are going to be doing the declarations yourself, you've read through all the guidance, you know what forms you need to fill, you know what you need to get done in terms of getting those goods across the borders. Now, a couple of clients that I've spoken to, and what they've effectively said to me is that if you're doing the declarations yourself, you do run the risk of holding up your goods at the border if you haven't done the declarations properly, or if the forms haven't been filled in correctly and that's been picked up. So it's really important to understand that if you've got quite a tight supply chain and you're very reliant on those goods actually coming through to you very quickly or being exported to your customers very quickly in these short timeframes, you're probably best to use a middleman to do all of that for you, because you will potentially look at doing those incorrectly if you've never done them before. And at the same time, it could delay and cause issues with your suppliers or your customers. But like I said, there's a lot of details on our Brexit hub on the website. Take a look at that. And if you've got any more specific questions on customs declarations, please do let us know and we'll try and help where we can. So moving on now, we're going to be talking about business to business exports. So effectively, this is where you're a UK business and you're exporting to a EU business. And like I've mentioned in the previous slide, from the 1st of Jan, you do need to make those customs declarations. And again, you can do this yourself or use an agent. You'll need an EORI number that starts with GB. And if you haven't applied for one, please do so, as the most important thing that you want to take away from today is get your EORI number. If you are a client of Raffingers, just reach out to your designated team member and we'll be more than happy to get that EORI number for you. Typically, these were taking a few days to sort of turn around. Again, I haven't done one recently in the last sort of week or two, but I imagine within a week or so, you should have that EORI number, if not even quicker. I think a few months ago, they were being turned around within 24 hours, but I haven't seen that recently. So it's just worth bearing in mind that this is one of the more important things to get done. So the key change for you now, if you're a business and you're exporting to a business in the EU, effectively, the export of goods from the UK will be zero rated for VAT. So effectively, 0% VAT. You're charging no VAT on that. But what's important to understand is that you'll need specific export licenses or certificates for certain type of products. So I've just listed some of those products here on my slide. So if you are exporting these types of goods, please do make sure you've got the correct licenses or certificates, because this is the sort of thing that will cause delays at the border and cause your goods to be held up if you haven't got the correct documentation. What's quite an interesting point, and something where a lot of our clients that I've spoken to today haven't necessarily considered, is please do speak to your customer, the business that you're exporting to. Please do talk to them and say to them, look, you're going to have to make some declarations on your side, and please find out what those declarations are. Because EU businesses that are importing goods will have to make those declarations at the border. And so effectively, it's important that you've engaged with them, you've specified in detail what they need to do with them, so there's no delay on them getting their goods. A couple of key positives, and this is sort of the lighter end of the legislation, is effectively EC sales lists and intrastat declarations for exporting are no longer required. So that's quite a welcome relief for a lot of accountants who have had to have completed EC sales lists or intrastat declarations previously. Those are no longer required for exports. But one key thing that I will come to later on the webinar is that intrastat declarations are required for imports. Again, we'll come back to that later on the webinar. Now, effectively, from a VAT perspective, your exports will be reported in box 6 of the VAT return. So box 8 is no longer used. So it's important to understand that when you're completing the VAT return for the first time after the Brexit transition period is ended, i.e. from 1st of January onwards. So this covers the business to business exports. And what you probably recognize once I finish the business to business imports is that the export side is a lot more simpler. It's a lot more easier. It's quite straightforward to understand. The real complicated side for you is going to be around making sure the business that you're exporting to, i.e. the EU business, has understood their requirements for the customs declarations on their side. So it's important that I suppose you really just get involved and communicate with your businesses that you're exporting to. And the way to recognize it now at the moment is the business to business exports regime that we have now with the EU effectively mirrors what we have now with the rest of the world pre-Brexit. So it's just effectively applying the rest of the world rules pre-Brexit to the EU now. So business to business imports. So like I mentioned in the previous slide, the export side was the more lighter side of the legislation and the more easier side to understand. The imports are a little bit more complicated, but nevertheless quite advantageous if you can use this to your benefit. So just like the exports, customs declarations when importing goods need to be made. Just as I said before, do it yourself, use an agent, freight forwarder, whatever you want to do, customs declarations do need to be made. And these declarations are submitted through the chief system that we spoke about earlier. And again, you'll need your EORI number. So like I said before, please apply for this now if you haven't. It's very important to do so. Now, the key change for business to business imports is that businesses need to pay customs duties and VAT on import consignments over £135. And this now introduces this new concept of postponed VAT accounting, which you may have seen bandied around sort of around November, December time. It's been something that's been talked about for the sort of last 5 or 6 months in draft legislation, postponed VAT accounting. Now, important thing to understand, this is on imports greater than £135. I will be coming to import consignments, I should say, less than £135 towards the end of the presentation. So just bear this in mind. You're going to have to apply postponed VAT accounting. A positive, again, EC sales lists are no longer required, which is, again, quite a welcome from a lot of accountants that we no longer need to fill these EC sales lists in. However, intrastat declarations for 2021, so for the next 12-month period, for imports of £1.5 million or more are actually required. So the key concept behind this, and I spoke to sort of one of our VAT experts earlier in the week about this to understand why is this the case, because for me it was a bit odd at the time, because for exports, EC sales and intrastats no longer required, whereas for imports, EC sales are no longer required, but intrastat are. The whole idea is that the government want to monitor and understand imports of high value. So effectively, any company that is importing more than £1.5 million worth of goods, they want to understand what they're doing. So for the first 12 months for 2021, intrastat declarations will be required. So again, quite an interesting thing, and I'm not sure what they're going to do with the data. I don't quite understand. It will be quite interesting to see exactly what happens in 12 months' time if they release any of that and understand exactly the level of imports that we have as a country and what they'll use that data for. I'm hoping after the 12 months, when we get to 2022, 1st of Jan, they'll get rid of the intrastat declarations completely, and so you won't have to have any intrastat declarations or EC sales for imports as well. So that covers business to business imports. But like I said, the key concept is around this postponed VAT accounting. So what I want to do is I just want to spend a bit of time to understand exactly what postponed VAT accounting is. So effectively, the way you have to see it, and the best example, I'm not going to sort of jump into the slide and read through the points, but say, for example, if I was a UK business importing sunglasses into the UK, effectively, the way it would work now under the old VAT regime is that I would have to pay duty and VAT on an import consignment, which was over £135. So as soon as those goods come over at the border, I'm levied with this import VAT. But because I'm a VAT registered business, I can then do my next VAT return and recover that import VAT and say, hey, HMRC, I've paid this and I'm going to be recovering it. So what they decided to do was introduce this scheme called postponed VAT accounting. So effectively what it means is, as a business owner, when I'm importing those sunglasses for import consignments over £135, of course, I don't need to pay that import VAT. I can postpone that VAT payment. And what I do effectively is I can declare and recover that import VAT on one VAT return. So effectively, it's quite advantageous for me as a business owner, because when I'm importing those goods, I no longer have to pay that import VAT. Yes, there's the duty. However, I can then just declare and recover that VAT on one VAT return. So it's quite a nice scheme where you don't have to pay it up front and recover it later, basically. Now, what's interesting is that for me, I found this quite a attractive proposition if you're a business owner and you're importing, because effectively postponed VAT accounting can be applied for both EU and non-EU imports. So basically, if you're a business that has worldwide imports, you can apply postponed VAT accounting from 1st of January 2021. And what's quite nice is that if you're a business that imports more from non-EU prior to Brexit than you do from the EU, you will have cash flow advantages, basically, because effectively you can apply the postponed VAT accounting regime to your non-EU VAT imports. So effectively, you don't have to pay for that import VAT on your non-EU imports. You basically save the cash. And it's a nice little Brucey bonus in terms of a cash flow timing issue. So one of the key things is that what you need to understand is businesses don't need any pre-approval to account for import VAT on their VAT return via this postponed VAT accounting regime. You can just apply for it straight off the bat in terms of doing it on your VAT return. You don't need to do any specific approvals from HMRC. Of course, you do need to be a VAT registered business in the UK to apply this regime. And the way it will work from I suppose, an administrative side of things when you're doing your VAT return is that effectively you report the VAT in box 1, 4, and 7 of your VAT return. So what you're doing is you're declaring it and recovering on the same VAT return. Now, there's an interesting concept around the whole Northern Ireland Protocol. And again, this was quite an interesting conversation I had with one of our VAT experts that we use quite regularly around how the Northern Ireland Protocol would work. Because effectively, this is what was holding up this and the fishing side of things in terms of the fisheries and the quotas and limits was holding up the Brexit trade agreement prior to Christmas. This was one of the key things that effectively the UK government weren't really happy with on how the Northern Ireland Agreement and the protocol would work. And effectively, I think it really works in the favour of the EU from what I can see. So the way it works with Northern Ireland is that there will be no changes to the treatment of VAT or how businesses account for the movement of goods between Northern Ireland and the EU. So basically, the treatment, if you're in Northern Ireland, is the same as it was prior to Brexit. So businesses in Northern Ireland will continue to be considered part of the EU VAT area. So goods arriving from the EU into Northern Ireland won't be considered as imports and therefore won't incur any import VAT. However, what's interesting is if, say, for example, from there on in, the goods travel from Northern Ireland into mainland UK, the current guidance from what we can see suggests that these movements will not incur import VAT and instead will be just treated like domestic sales and purchases, and they will just be treated as the same way as they were previously, pre-Brexit, in respect of VAT, just domestic sales and purchases. So what a lot of the larger businesses that import and export probably might do and look at doing is to establish consignment centres via Northern Ireland and look to then import via Northern Ireland. However, what you hope and what the whole UK guidance at the moment with regards to postponed VAT accounting suggests is that they want to avoid this happening. So they want to avoid large businesses moving over to Northern Ireland and basically not accounting for import VAT, selling their goods through to mainland UK as a normal domestic sale and purchase effectively. So you hope that this application of postponed VAT accounting will basically take a lot of businesses off that regime and leave them as they are on mainland UK. But as you can see, this whole Northern Ireland Protocol and the way it works, from my opinion, what I can see is it really works out in favour of the EU because effectively Northern Ireland still remains as part of the EU VAT area. So effectively, you can understand what the postponed VAT accounting regime is about. The whole aspect of it and the whole reason why HMRC and the government have introduced this is to ensure that any UK business doesn't have any issues around cash flows when they're importing. It's just to make it more advantageous for our UK businesses with regards to importing goods and not having those cash flow timing issues. And like I said before, if you're a UK business and the majority of your imports are outside of the EU previously, you're going to have some real good cash flow benefits, because effectively you're going to be applying this postponed VAT accounting to everything that you do, which is nice. What's interesting, and you'll see from the slide there, is postponed VAT accounting actually is optional, which I found quite funny when I first read it, because it'll be interesting to see what type of businesses don't actually apply postponed VAT accounting and why they're not going to be applying that. So let's just say, for example, if a business doesn't apply for or doesn't use postponed VAT accounting and they pay for the VAT upfront, effectively it follows the case of the non-EU imports previously. You'll need the monthly C79 reports from HMRC to show the import VAT that you've paid for, and then effectively you'll recover that for your VAT return. But one key point to note is that postponed VAT accounting will be mandatory if a business defers the submissions of its customs declarations. So there is a part of the legislation which looks at where you have to make customs declarations, you can make use of an initial 6-month custom deferment period after the end of the transition period. So effectively, what it means that from 1st of June, so 1st of January to the end of June, you can delay your customs deferment, you can delay your customs declarations, this customs deferment period. But if you do that, you can't look at this optional use of postponed VAT accounting. Postponed VAT accounting will then become mandatory as well. So again, it really depends, and you need to really tread carefully with regards to what you're doing with your customs declarations and your postponed VAT accounting. So in terms of the practical side of things, how will it work? So businesses using postponed VAT accounting, you'll receive a monthly statement with all your imports where you've opted for postponed import VAT through the customs clearance paperwork. So effectively, you'll get this monthly report. And the way it would work is, if you're doing the VAT return yourself, or if we're doing it, effectively, you'll pass that report on to us, or you do it yourself, and you report that on your next month's or next quarter's VAT return to make sure that you account for both the input and the output of VAT. So you declare it and recover it on the same VAT return. So the key thing here is those monthly reports. So really, in summary, from my point of view, what I can see here now is that there's no negatives with regards to using the postponed VAT accounting regime. It's just more of an administrative burden. But like anything, when there are changes to the way we do things, it will take some time to get used to the implementation and the administration of it. But really, from what I can see, is that once we're over it, and once we've learned how to get the monthly reports, once we've learned how to account for these in your boxes 1, 4, and 7, once we know exactly how to make sure we're getting everything through and putting it on the VAT return, it's going to be pretty straightforward, and it's going to be quite a nice little advantage for businesses to have that cash flow bonus. Like I said, especially if you're importing specifically from non-EU countries. So that's postponed VAT accounting. Hopefully, it's giving you a basic understanding of that, and at least giving you some clarity on how it works. So like I mentioned previously, we talked about the businesses that need to pay import VAT and duties on consignments over £135. So what about import consignments less than £135? There's been quite a lot of, I suppose, commentary since the Brexit trade agreement was released just before the new year around how this would work. And my honest opinion is there's going to be a lot more fallout from this, because this is the most divisive area of the legislation for, say, online resellers, online marketplaces, people who are basically selling to individual consumers here in the UK from the EU. So there's quite a lot of divisive bit of the legislation here to consider. And I think there will, in my opinion, be a lot more commentary and a lot more to come out from this going forward, because it doesn't necessarily lend itself favorably to EU businesses. So effectively, we might see some sort of equivalence on this going forward in the months to come. So one of the key things to think about here is import consignments. Import consignments with regards to these thresholds of £135 applies to consignments, not individual items. So going back to my sunglasses example, it won't apply to if I was to buy a single set of sunglasses. Effectively, you're looking at people sending consignments, collections of goods, of parcels, of pallets of goods over to the UK. So it's not particularly looking at individual items. So effectively, what you need to look at is where you've got e-commerce sellers or facilitating marketplaces, which have really taken off in the recent pandemic. These online marketplaces, basically, they need to charge VAT at the point of sale on importing goods which aren't exceeding £135. So this is rather than paying the import VAT. So effectively, they will charge that at that point of sale. So effectively, what it's doing is it's moving the VAT liability, like I say on the slide there, from import to supply. Now, what's quite interesting is the online marketplaces that are involved in facilitating the sale will be responsible for collecting and accounting for VAT. And at the same time, any goods that are sent overseas and sold directly to UK consumers, say without an online marketplace. So, say, for example, if you're an EU seller selling directly to a UK consumer, effectively the overseas seller will be required to register and account for VAT to HMRC, which is a real pain if you're an EU seller. So what you may have not noticed, there was a lot of hoo-ha earlier on in the week where we had Belgian companies selling consignments of beer to UK consumers over the period after the 1st of January, effectively had to then account for VAT on those sales and charge VAT. And they just looked at it and said, this is going to be too onerous. And so there was a really interesting article that was released this week where a lot of Belgian beer sales have effects, or companies have said, we're not going to be selling to UK consumers. Please try and buy our goods through other means, which is quite a brave step because they don't want to deal with the burden of having to administer and effectively account for the VAT to HMRC here in the UK. They just see it as an administrative burden. So if this continues and a lot of EU companies are no longer going to be servicing UK consumers at this sort of level of goods, I do think there will be some sort of equivalence and some sort of change to the rules, you hope, in the months to come. Now, what's interesting is that this also applies for business-to-business sales. So if you've got import consignments from businesses in Europe into the UK, this does apply. But at the same time, if this UK customer, the UK business is VAT registered, and you give them your VAT number, effectively, what you can do is just apply the reverse charge process. So how we saw similarly for the reverse charge previously, pre-Brexit. So again, it does apply, but it doesn't really make a difference here if you're VAT registered. And there's just a small point in the legislation which was quite interesting, just at the bottom that I saw, that was just left in there. And the existing VAT exemption on parcels not exceeding £15 has now been removed as well. So that's worth bearing in mind if you do have those type of imports. So the final point I will make on this is if you have import consignments that aren't going to be exceeding £135 and you do have some questions or queries on how that's going to work, and you are in that contact with your, I suppose, your EU supplier, please do let us know if you need some help with these particular rules, because I have looked at this and it is quite complex specifically to look at. And I do think there's going to be some sort of fallout from this to take this further, because it doesn't look to be very advantageous for a lot of people that want to be involved in these type of areas. So we've talked so far, just in summary, really around business-to-business exports, business-to-business imports, this postponed VAT accounting, and then the import consignments of less than £135. I actually now want to move on to business-to-consumer exports. So effectively, this is where you're a UK business and you're selling to an individual consumer in the EU. So this is really looking at the old distance selling that we had previously. So effectively, the way it works is if goods are sold to consumers in another EU member state by a UK business, this is seen as a distance sale. Now, the whole idea is that the distance selling regime has been abolished effectively. And the way it works now effectively is that what you've got to look at is you've got specific thresholds. So each EU member state has a turnover threshold after which registration is required in that particular member state. Now, the key thing to bear in mind is that if you reach that threshold as a business when you're selling to individual consumers in that particular EU member state, you do need to register for VAT in that particular country. However, there is going to be a one-stop shop or an EU e-commerce package as well, which will be introduced on the 1st of July, which is going to simplify the registration accounting procedures for EU distance selling. So effectively, we're in this transition period from 1st of January to the 30th of June 2021, where effectively these distance selling rules do apply still until we get this new EU e-commerce package and this one-stop shop. So what does it mean basically? So from the 1st of January to the 30th of June, UK businesses that are selling to EU individual consumers, so effectively Joe Blogs in Spain, the sales will become exports. They'll be zero rated in the UK, but, and here's the key point, they will be liable for VAT and possibly duty in the import country for the EU consumer. So effectively, that's going to be the local VAT and duty in that particular EU member state. So what does that leave you with? And this was a really interesting point pre sort of the Brexit trade agreement being agreed. I actually discussed this in detail with one of our clients who's going to be impacted by this quite significantly, because they do sell to individual consumers and they really weren't sure what they had to do, because effectively they can zero rate their goods from here, but in the EU country there's going to be import VAT and there's going to be duties to pay. So effectively their goods are going to become more expensive and effectively less competitive to local goods in that particular EU country. And it was a real dilemma. And it was something I spoke to a few people about. And it only really leaves us with three options until we get this one-stop shop and this EU commerce package on the 1st of July. Your first option is do nothing. Effectively, your EU consumer pays the VAT and duty on import. And in that particular scenario, it doesn't really lend itself to any good business, because effectively your goods are going to be more expensive in the EU. Effectively, you're going to be less competitive compared to local businesses. Your second option is particularly not the most attractive option, is that you can become an importer in each EU member state. So for every single country that you sell in, you can basically become an importer of recognition in that state. And so basically you make sales to your individual consumers as a registered business in that state. You register for VAT in that particular member state and you recover the import VAT. So effectively for your consumer, it's quite nice for them. It doesn't make a difference. They still see it as the same as it was before, and then you pay for and recover that import VAT. So you become a seller in that local country. And you can do that in every particular member state. The third option, which is, I suppose, the best of the worst options, in my opinion, is that you become a importer in one member state. So effectively, you route all your goods from the UK into the EU through one member state. And the way it works is that you make your sales from that one EU member state to all of the other EU member states through the old distance selling thresholds. So as long as you stay below the thresholds in terms of turnover, you don't need to locally register. And effectively, you VAT register in that one particular EU member state you do choose to go into, and effectively you recover the import VAT. So as you can see, there are options to get around this between basically now and the end of June, but they're not very attractive. They're very onerous, quite time consuming. And for the sake of 6 months, I don't see a lot of businesses really bothering to go and register in other EU member states. So it's something to bear in mind that you can do, but whether you want to have the aggro of doing that, or if you just want to wait until the 1st of July when the EU commerce package and the one-stop shop are launched, it's worth bearing in mind that these were delayed. So these were meant to be in place now, but they were delayed to the 1st of July. So we won't know whether they're definitely going to be in place on the 1st of July. That's what we've been told. And I truly do hope so, because these options at the moment aren't very attractive for businesses. But at the same time, once it is applied and we've got this new trade package, these options will become redundant anyway. So as you can see, a lot to consider if you're selling to individual consumers in the EU. If you are considering that third option, what I would say is just look at possibly registering in places like the Republic of Ireland or Malta, because they effectively have all their guidance in English. You don't want to basically go and register in Italy or Spain, where all their guidance will be in Italian or Spanish, where you can't necessarily interpret that. So it's probably best to register in countries which have the legislation, the guidance in English as well. Moving on, service businesses. So we've looked at imports, exports, the good side, and as you can see, the Brexit trade agreement is very, very, very heavy to the good side. There's very little talk of services. It's mentioned, but it's not as heavy as goods. And as you can see, that's the most important part of the trade agreement, which to me is quite interesting because the backbone of the UK economy is our service industry, financial services, and what we provide to the EU. And we're seen as a financial centre and a hub within Europe. So the fact that there's not been many considerations in the trade agreement for services is quite interesting. But at the same time, what we've seen from a lot of our clients, and over the last sort of 2 or 3 months, as we've crept up closer to the end of the transition date, has been that a lot of our clients have come to us and said, look, we don't import, export goods. We don't have any cross-border or customs declarations issue. We actually provide services, or we buy services in from the EU or to the EU. So how does Brexit affect us? So what I'm going to do briefly now is just cover some of the key changes. So normally, when you're a service provider or you're buying services in from the EU, if you've got a business-to-business service, effectively the supplier is where the customer is based. If you've got a business-to-consumer service, the supplier is where the supplier is located. So again, very, very straightforward. The rules that we're used to, what we know about using the old reverse charge scheme. And effectively, there are specific rules around electronic services, telecoms, that sort of thing through the MOS scheme as well that we know about. So nothing untoward, nothing challenging that we've seen previously. So effectively, the new guidance, how has it changed? What is there to look at? There's not a lot of changes generally. For business to business, it's pretty much the same. All it means is basically EC sales are not required. And for business to consumer, there are some tweaks, but it's more so when you're providing particular services. So what I've summarized and the way I've looked at it is services that are supplied from the UK. So if you're selling to the EU from the UK, and services supplied to the UK. So if you're buying in from the EU, and this is how I've split it in my sort of mindset and the way I've looked at it. So services supplied from the UK. So let's say, for example, as an accountancy practice, we're providing services to a company based in Spain. It's that sort of concept, basically. So UK VAT-registered businesses supplying services to EU VAT-registered businesses are not subject to UK VAT, as we were before. No changes, quite nice, quite easy. And that EU recipient business effectively accounts for VAT on the reverse charge basis. So as we saw before, nothing has changed. UK VAT-registered businesses supplying services to non-VAT registered businesses may have to register in that particular EU jurisdiction, because effectively the way the EU see this now is that it's a business-to-business supply. So if you are a business supplying another business in the EU some services, but that business isn't VAT registered, you may need to look at the local VAT registration requirements and register for VAT in that local jurisdiction. But again, this is not different. There is no change. This is nothing that we didn't know about prior to Brexit. UK VAT registered businesses supplying services to private customers must charge VAT. So for example, if we are providing a service to a individual in Spain as a UK accountancy practice that's VAT registered, we will need to charge UK VAT. Where the changes do come into this, though, are around the provision of certain services and the application of MOS. So effectively, if you're a business to consumer sale, if you're doing that sale from a UK VAT registered business to an individual consumer, what you need to look at is what type of service you're providing, and are there any particular changes in that particular area. Firstly, digital services. So these are the electronic services that I spoke about with regards to if you're using the MOS scheme. The MOS scheme no longer applies from the 1st of January. You need to register for the non-union MOS, basically. Now, I've got a specific slide on this later on to cover, which we'll go through. Other key things to look at is if you're looking at entrance fee to physical events, training, sport and culture, UK or EU businesses will have to VAT register in the country of the event, or you can use the new one-stop shop that is applied from the 1st of July. Honestly, this makes no difference because given the time of COVID, no one is doing anything at the moment in this particular area. So effectively, this will push on to the one-stop shop. And then you've got these professional, technical, advertising services that I've listed there, the last bullet point on the slide. Effectively, UK VAT doesn't apply anymore. However, what it does imply, and this is a bit of a grey area in the trade agreement, is that UK and EU suppliers have to VAT register if they have foreign business to consumer transactions or customers in that particular country. So from UK to EU, EU to UK. So basically what it does mean, this grey area, is that you have to account for VAT where the customer is based. But like I said, this is a particularly grey area, and I haven't seen any concrete guidance on this. I spoke to a couple of our VAT experts externally that we have contact with, and it's still something that is being absorbed and understood by these VAT experts to understand how this would apply where you're a UK VAT registered business providing these type of services to individuals who are not VAT registered in the EU. So potentially you may need to account for that in that local jurisdiction. But again, like I've said, if you are particularly concerned and you do provide services in these areas, do reach out to us and we'll really drill down into the specific guidance. And I'm hoping in the next couple of weeks, we do have some more specific concrete guidance on this to understand and how this would work in terms of those local accounting VAT rules. So as you can see, quite straightforward, apart from that last point with regards to supplying services from the UK into the EU. Not a lot has changed on the whole. It's just some specific changes for different types of services that are provided. So what about services that are supplied to the UK? So you're an EU business selling services to the UK. Again, not very much to consider here in terms of changes, not particularly onerous. Again, very similar if you're an EU VAT registered business supplying services to a UK VAT registered business, there is no VAT, and effectively you have the reverse charge scheme. And as the UK business here, we'll apply that reverse charge scheme on our VAT return. The other side of it is where you've got an EU VAT registered business supplying services to an individual consumer or a non-VAT registered business here in the UK. They shouldn't charge UK VAT, but effectively they may have to charge VAT in their EU jurisdiction. So effectively, the way this is seen is that the place of supply is being seen at EU state, so where the supplier is based, basically. And so what they need to look at is potentially basically applying their local VAT or their EU VAT on those particular services or sales to individual consumers. But again, nothing that we've not seen before, very similar to the old guidance. So that's covered pretty much everything I wanted to in terms of the core schemes. So just as a recap, we've looked at business-to-business exports, business-to-business imports, and this new postponed VAT accounting regime. Business-to-business imports and these potential import consignments with regards to values of consignments less than £135. And then at the same time, we've looked at business-to-consumer exports and these new distance selling and how that would work. And finally, how the services businesses are going to be looking at in terms of VAT considerations and the changes for them. The final couple of points that I want to complete on today is just around some specific schemes, specific VAT schemes if you're under the margin scheme or your MOS returns. Margin scheme, effectively, 1st of January, margin scheme no longer applies in terms of looking at the EU, it only applies in the UK. And so it's quite attractive for a lot of businesses here. They only need to look at sort of the UK side of things. Interestingly enough, now MOS returns. So that's where we've had a lot of correspondence with our clients recently. If you are completing MOS returns, this is where you provide electronic types of services, telecommunications, broadcasting services to clients. Effectively, the way it works now is that post-transition, UK businesses will have to register for a non-union MOS scheme. So effectively, this is for businesses that are no longer established within the EU. The alternative to this is that you register for VAT in every member state where you have customers, and effectively the VAT registration threshold is nil. To be honest, I wouldn't even bother. It's onerous. Why would you? You might as well just do the non-union MOS because it's just going to be so much more easier and straightforward for you. Effectively, the way it works is if you are on the old MOS scheme, you apply for the non-union MOS, you choose a particular member state that you want to have that non-union MOS registration on, go for Ireland and Malta because the guidance is in English. You'll be crazy to put it through a different jurisdiction where you probably won't understand the language. So very straightforward, register for non-union MOS in another EU member state, go for Ireland or Malta because the straightforward guidance on there. So that pretty much covers other VAT considerations. And that pretty much brings me to an end in terms of where we are today. I was hoping to keep it under an hour, which I've managed to do, so I'm quite pleased. A summary and some key takeaways for you. Effectively, apply for your UK EORI number if you haven't already. We've got a link on the Brexit Hub on our website on how to do that. If you're not sure and you're a client of Raffingers, just get in contact with your designated team member. We'll sort that all out for you. It's pretty straightforward. If you're importing, please make sure you understand the postponed VAT accounting rules and avoid those import VAT charges and make sure you've got that cash flow advantage. Key takeaway, like I said, get onto our Brexit Hub on the Raffingers website. We're going to be continuously updating that. We're going to make sure we've got all the relevant guidance on there. We've got all the relevant links on there, especially around the customs declarations and how you need to choose different types of agents and what forms you need to fill in as well. we'll be continuously updating the guidance on there with the new legislation, and I don't see a lot of that changing until possibly the 1st of July, when we've got the new one-stop shop and the new EU e-commerce regime. So just please keep an eye on that. And if you do get our email alerts, we'll be putting the relevant guidance on there as well. Like I said, I won't be doing any Q&A. What I will be doing is, for all the questions that, and I can see there's a number of questions that we've got in the Q&A box at the moment, what we will be doing is collating all of those. I'll be responding to those in the next few days. And for all the attendees here today, in the next few days, we'll be circulating around my presentation, plus all the questions that have been asked by our participants today with my answer. And once I've been through those and given you the correct answer to those in guidance to the legislation, and hopefully that should be sufficient for you. And at the same time, if you do have any specific questions, because I do appreciate that after looking through a lot of this today, it's quite heavy, there's quite a lot to take in. If you do have any specific questions with regards of what you need to do and how you need to do it and your particular business circumstances, please do reach out to us. We'll be more than happy to help and go through these with you and interpret the rules for you. So I'd like to finish off by saying thank you for attending today. Hopefully it's not been too heavy and too much after the New Year break, but we'll be definitely looking forward to getting in contact with you guys and taking business forward from here. Thank you for attending.